Glad to know you are still there. This is To This Business if you are just tuning in. Well, you can join us. The conversation is not just on TV. We are also available on social media. So just tweet or send a Facebook message to us at Silverbird News 24 or Silverbird Television. You can send your questions there and comments as regards what you think about the Q2 GDP report as dropped by the National Bureau of Statistics, and we sure would get your message. Joining me right now is Ayodeji Ebo, an investment analyst, and he will be doing justice to the issue at hand that the whole of Nigeria is raving about. Good day, and thanks for joining us on To This Business, Ayo.
Thanks for having me.
Quickly, let's get your reaction to the GDP report. What were your expectations? Was it worse or better than expected?
Okay, thank you. I think firstly, it's in line with our expectation. We are projected about 3.5%. So it's I would say it's in line. And if we for us, we're already expecting, it was just for the recession to be made official. We all know that when an economy goes into recession, when you record 2 negative growth rates. But why this is a major shock is it's also coming when we have very high inflation rate. Inflation rate is also approaching about 15% or 14.23% based on the October inflation rate, and you also have that high unemployment rate. So it's like a major issue for the economy. So where you have growth in negative region and you have that high inflation rate, it means that the implication is that there are more people who will be impoverished, and it really doesn't sound well for us in the economy. Yes, this issue is not only isolated to Nigeria. So if we look at the first quarter decline, that's about 6.1%. We've seen that's an improvement compared to the first quarter. But when one look at in reality, looking at what's happening in the economy, we'll know that a lot of people are also finding it difficult to meet for them to live within the means that are available. So by and large, it's not coming with a surprise. If you look at further look at the breakdown, you see the oil and gas sector. The oil sector, would see that that sector further dipped into a negative region, which is also, you can link that to the OPEC quota cuts, which it's beyond Nigeria. We expect that to also continue to the end of this year to keep oil at a reasonable level. So what I think we should just see what do we need to do, what we need to do to take us out, so that in the first quarter, for us, we are still projecting that the growth rate will still be negative, though maybe within the 1 to 2% levels in the fourth quarter. But what do we need to do so that the first quarter of 2021, we can have a sustainable growth rate? Once your growth rate still lags below the population growth rate, then there's really a problem. It means that you are having more people that are going into poverty level.
Ayo, before I go into the oil and non-oil sector performance and how much they're contributing to GDP, what policies do you think worked against the economy, specifically in the aftermath of COVID-19 and the hashtag #EndSARS protest?
Okay, for us, I think the first thing is the continued reliance on oil for survival. So if we check how the actual budget is structured, yes, if you look at the projection or you look at the main budget, you would see that the projection of revenue is not based on oil. But when you look at actual performance, you would always see that we get more revenue from oil than the non-oil sector. So any major fluctuation in oil prices would impact Nigeria. Yes, there was a shutdown, a lot of businesses were down, but you would see that with the opening up of the economy, would have expected that for most of the sectors would also rebound. You also want to look at the trade sector. We need to look at some of the policies that are also affecting transactions within that space, such that we're also able to come up with that policy. We need to review the FX policy around that space so that for most of the traders, trade sector accounts for a major part of employment. And for us to sustain that employment generation, we need to ensure that policy is also favorable to trade. So by and large, I think if we look at the trade sector, we look at the manufacturing sector, and we need to come up with policy that would help drive those sectors. That would really help a lot.
All right, thank you so much, Ayo. But in connection with what you just said, I want to show us a bit of a graph showing how much contribution the oil sector makes to the economy and the non-oil sector, and it shows that the oil sector accounts for 8.73%, yet it contracted by minus 13.89%. Then the oil non-oil sector, which makes up for more than 90% of the economy, contracted by 2.51%. At this point, don't you think, some school of thought think as well, that the concentration should be moved away from oil as much as possible? Because I have to say this at this point, that the UK released a report just a few weeks ago that they would like to move away from diesel and fuel cars to electric cars. This means that Nigeria, at some point, who exports oil a lot and depend on oil, might have no markets to sell to if other countries adopt this particular method. So don't you think there should be some concentration, move a lot of energy, a lot of concentration away from the oil sector into the non-oil sector?
I think based on the structure, we all know that the economy is well diversified. Oil sector accounts for less than 10%. But if you look at in terms of the revenue base of the economy, our dollar based, we still depend on oil for us to pay salaries, for us to be able to meet our obligations. We still depend heavily on oil. So that is where the focus should be. Yes, it's being discussed. There's really nothing new. We're not just discovering that our economy needs to be diversified, but I feel that there needs to be more effort in actually pushing for a more diversified economy. The government can identify the top 3 sectors that account for a major part of employment and can also generate more income. If you start with the agri sector, there are a lot of policies within that space, a lot of intervention funds to support. I know even CBN has identified some top crops and trying to see how there would be increase in production of those crops. But we're yet to begin to see that result. Beyond just looking at the planting, the value chains is also critical if we look at how we want to develop the value chain within the agri sector. If that's it, like the storage is something that is lacking, that also leads to the fluctuation, the seasonal prices that we get. Then stepping away from the manufacturing sector, you are looking at the trade sector. You would also look at what are those policies that is responsible for this low growth in that space. If we need to also take care of that. Also coming to the third sector I would like to touch on is the manufacturing sector. So we need to come up with a national development plan. How do we want to grow this manufacturing sector? How do we want to provide an enabling environment, like providing infrastructure, providing power for these companies, so that they are competitive. So if we need to be very deliberate about that and put in more action. The SMEs account for a major part of the manufacturing companies, and they can generate job, they can generate employment that will also take care of security. If you increase your employment rate, insecurity would also come down. So if we focus on these 3 major sectors, come up with a we have the plan. I won't even say coming up with a plan. How do we want to implement it, and how are we tracking and measuring that impact such that we diversify our revenue base? Until we achieve that, we'll continue to be to depend on that volatility. That volatility in the oil and gas, in the oil prices, will continue to affect us. And I'm hoping, we just said that this is the second recession in less than 4 years. What happens in the next 2 years if there's any major shock on oil prices? Are we also ready for that? And I would say the answer is no.
Such an answer, pretty abysmal. Now, speaking of the road to recovery, let's take a look at the budget for the 2021 fiscal year. That's at 13.08 trillion naira, and it was tagged the budget of economic recovery and resilience. Now, we see that the revenue we're expecting is 8.433 trillion naira, while the expenditure is at 13.08 trillion naira. If you look at the capital expenditure, recurrent expenditure, are pretty on the other side. Now, does this budget we're looking at fit the theme of the year? Is this more like a way to show us that the economy is going to recover, or does it need some sort of rejigging?
Okay, very interesting. If you pick on the revenue, and there's the dependent on revenue from independent sources about 55%. That's the MDAs and government-owned agencies. If we look at past trends, government has not been able to achieve even close to 50% in any year on that allocation of or section of the revenue. Secondly, the non-oil revenue, that is also a major challenge. So when you look at the deficit, which has been estimated about 5 trillion, it means that it would be significantly higher than that. Also coming to the cost level, you look at the personnel costs, which account for about 30% of the total revenue. That also is also on the high side. When you look at, it means that the cost of formulating this policy is really high. If we are using 30% of our total expenditure to fund government agencies, it's really very high. We need to see how we want to look at that, maybe block the leakages and see how we want to bring that down to a reasonable level, because you will look at it, you put it in this perspective, about maybe 5% of the total population is spending about 30% of the budget. Beyond that, you also look at what has been allocated to capital expenditure, which is the productive sector, 3.85 billion. Most times when we're unable to meet up with our expenditure, the capital expenditure is always at the receiving end. So this is really very clear that the budget can't take us out of the problem we have. What does government need to do? Partnership with private sector owners, it's more critical for the funding. So a lot of the projects, rather than continue to ration this capital expenditure to various projects, and it's taking 10 years to complete the project, why don't you also concession and come up with a robust framework? Because part of what is also making most of the investors to also stay away from some of these projects is because sometimes government does not hold on to contracts that have been signed. So if we create that framework, create that confidence, we can, most of the projects, we can assign and partner with private investors, whether it's on a build, operate, and transfer, or you just want them to build and transfer, would come up with a more robust structure that the economy, as you are creating those projects, they are creating jobs, and the spending capacity is also increasing. And it's also reducing the time for us to recover. If we don't grow at a rate that is higher than our population growth rate, it means that a lot of more Nigerians will continue to go into the below poverty level, which would increase insecurity. So by and large, in my view, I think that, yes, this is a bold step of trying to spend 13 trillion because you need to spend more to come out of recession. But this budget we need more partnership with private investors. We can use our capital expenditure as equity contribution in some of these projects to increase the multiplier effect. So if we're able to do that, we'll be able to achieve more with the little that we have. And that would be able to take us to that growth that would be above the population growth rate.
Spot on, Ayo. Thank you very much. Quickly, before I let you go, let's look at the recovery rate, or how soon we are going to recover. Madam Zainab Ahmed, the Minister of Finance, said probably the last quarter of 2020 and the first quarter, of 2021. That's pretty hopeful, I think, but is that achievable? Also, what is going to be the shape of recovery, L, U, V, or W?
Yeah, for us, we feel it's going to be U. It's going to be gradual. The NSAS protest has affected the projection for Q4. We know for the month of October, a lot of businesses were also shut down. So that would also have impacted on the expectation of Q4. But looking beyond that, for us, we are projecting that we may move to a marginal growth rate in Q1 2021. There needs to be a deliberate implementation. There are a lot of very interesting ideas that government have. The Bureau for Public Enterprises also have a lot of interesting ideas on concessioning. So we need to begin to implement those policies. And once we're able to achieve that, I think by Q2 2021, we should be bold enough to say we would be expecting a positive growth rate. But beyond just, if you look at pre-COVID, our growth rate in the last maybe 7 or 8 quarters were all below our population growth rate. So we should be looking at achieving a growth rate that would, if not, that would be above, significantly above our population growth rate, so that we take more people out of poverty and we can deal with our insecurity issues. Because once you're able to engage people when they are working, it would also impact on the insecurity level in the country, because foreign direct investors would also be a major point of consideration for them before they even invest in our country.
All right, quickly, sorry, I have to, this is the last question this time around, I promise you. MPC outcome, retain, increase, cuts.
For us, we are going for retain. They need to give also, the CBN or the MPC committee may want to give for more room transmission effects based on the last cut from 12.5% to 11.5%. So they will also want to watch and see how that has impacted the economy before they make any move, maybe in January.
Thank you so much, Ayodeji Ebo, Head Research and Strategy at Greenwich Merchant Bank, for your awesome insight into what's going on with our economy and the way forward. Thank you so much for joining us on Today's Business.
It's always my pleasure. Thank you.
Tomorrow is another day. We're talking about something pretty interesting, the AFCTFA and Nigeria's readiness. So at this point, I'll have to say thank you for joining the show. The next edition comes up tomorrow. So until then, my name is Mercy Frank. Stay safe.